Welcome everyone to the Hurley Investments Market View Commentary, our first one for December, one of three. We'll then take a 2 or 3 week break. Usually it's a 3-week break. Get through Christmas, get through the holidays or the week after Christmas. We usually don't do one on the New Year's, but welcome to the first of 3 for December, and then we're going to take a 3-week break. But question to the group, and the reason why I'm asking this question is because do you think we've hit our Christmas rally? Hard to say yes or no. Oh, there's a hard no from Stuart. David's a hard no, and Dave is a yes. I mean, it's kind of interesting. The last week, we went from 65.21 all the way up to 68.50. That was a pretty significant rise up. No, looking for the Fed to cut rates. Yeah, dang it, that Fed meeting is December 10th, which kind of blows it for everybody and everything. I would have said yes, since we came from 65.12 to 6,800. And then we had today, right? S&P down today, 0.53. I mean, really, it's not too bad, but it does make you worry. It does make you worry about, hey, is it still intact? Was it dumb money in the market last week? Or did retail need, not retail, did the professionals, right? Notice I'm going to say this. Did the professionals need to catch up to the indexes to look better? Or the real thing, did we just witness window shopping in accounts, where all of a sudden they put in more Micron, more Apple, more Google? Oh, we've had it. Or did we get scared today for the FOMC rate meeting on December 10th? All these things we don't know, which is why we had deep in the money 210 short calls on Micron. And let's be honest, one of you chewed me out. How could you have it so far in the money? Well, because in 5 days it went from 260.58 down to 192.59. And when it broke the 50-day, yes, we added puts for a very short period of time, ripped them off pretty quickly. Micron is not for the faint of heart. In fact, Micron, when you see that kind of movement, yeah, it's a little scary. It makes you wonder or worry. Is it going to lose 35% all the time? This is a little bit about what we had last week. Why are we trying to sell at a Micron? It's a 253. Well, we're taking a huge profit. We had 800 shares. We're going to use the stock replacement strategy, a 230-300 bull call. It's like we're getting on 215. We were ecstatic. But we did more to Micron, and it got better. We bought back the 210 short calls for $1.11 or better. If you take $9.30 minus $1.11, we had it that we basically booked $8.19 profit and uncapped Micron. And there's the proof. At least there's the proof for one of them, right? Not bad. Bought to close. Loved it. Good position to be in. Then we let Micron run all the way up to, notice how we're saying we let it run. Okay, maybe it just ran up that far. But then we let Micron run all the way up to 230. This is where we are at today. We still have our Micron shares. Yes, Micron closed today closer to, what is it? 240, 46. We have December 230s. 2 days after the rate cut or rate no movement, which unfortunately I believe we will have a rate no movement, which sucks. But we took in at another $11. So let's add this all up together right now. Micron, covered call credit. We took a profit in of $8.19 plus a December 12th covered call credit of another $11 and selling the stock $20 higher than our last covered call credit. As I'm looking at it, to me, it's roughly $20, $30, $39.19 more profit we adjusted into Micron. Now, I'm pretty sure we did take a $6.90 loss on puts. So it's not all beneficial, but roughly we gave ourselves another $30 to $39 of profit at Micron. We still want to be out. before earnings. And just one more little tidbit to enjoy here. We already added our stock replacement, the 220 300s. We already added that in. And we're up on it about 2,500 bucks if you have 8 contracts. If you don't have 8 contracts, we're up about $300, $303 per contract. We're already in place to have our position there pre-earnings so that we're going to be in good shape if it continues to take off after earnings. For everyone, we're looking to get out of Micron. We've got too much profit and over leverages portfolios. We need to take our profits on Micron. Someone just typed in, no rate cut will destroy the market. I think it seems to be expecting one. It's at 50-50 right now. It was closer to an 80% plus until they spoke in what, Wyoming somewhere? I don't know. But it's only a quarter point. It doesn't do anything, period. In fact, the last percentage that we've got, the last 100 basis points, the last 1% of cuts, our rates haven't changed. We're right there. Trump is right. We should have been cutting 50 basis points instead of only being down 1 or 1.25%. We should be down 2.5%, and our rate should sit around 2.5 to 2.25%. But the Fed hasn't done it. The Fed's $1 late and a day short, or $1 short and a freaking year late. We're still outside of where the European market's at. More of the first world countries are at. We're just, we should be juicing our economy. We did have some reports last week that actually were pretty positive about payrolls, but the June and August numbers, they cut back. The August, September numbers that were worse. So we do have a worry about employment. We can cut the rates in an amount that puts it down to where it gives our economy the opportunity to continue to go higher. But I like where we're going to be at. We've booked some good profit. We have some more credit coming in. I'm excited to get out of Micron to capture that credit. Nothing like spending $75,000, having it worth much more than that right now. As you remember, we went through those short calls. Our initial investment was closer to $30,000. So pretty neat that $30,000, we should get out at around 180-ish. And that's a great, I mean, we're looking at a 500% return, 4 shares of Micron over a 2.5-year period of time. What will I do with the profits? We are not sure. We're still under the same impression as of last week or 2 weeks ago when I discussed this, that we want to be a little cash heavy going into next year. We want to be looking for opportunities. We've got a lot of research we're going to do over that 3 weeks. We are looking at possibly jumping into some Palantir. Some Netflix is now down at $100. So there's some opportunities that we see there, but we don't know. That's what the holidays are. I'm crunching numbers on that Excel spreadsheet. I'm working on seeing things that are available for us. And I don't know where those profits are going to go, but they're going to go somewhere. Or we might sit in a little bit of cash if the market into some things. In fact, I hope everyone noticed two things about Disney. Pretty neat. Yes, we got Disney put to others at 115 or 116, depending on where we got you protected at. Yes, we got you back in today. Because Zootopia 2 was the leading movie over the holiday weekend. And they've got a pretty good lineup going into next year. We're still a believer in Disney. It was just easy for us to take profits, long-term gains for everyone, rebalance it where we now have, we have like 60,000 shares where everyone's at the same price going into another year. It just was easy for us to make this work in a way that that we could sell up higher, take those profits, and get ready for another year to stay in it, starting with everyone at the same price. Anyway, just a little something we're looking at, but we're quite proud of ourselves. We're quite proud of ourselves for what we were able to do with Micron. Okay, with that said, earnings, Micron's coming up on the 17th. The briefing picture. Fed pushback on near-term rate cuts triggered broad de-risking across equities, crypto, and AI-linked stocks. I'm not sure I believe that. And caps and leaders lost momentum as valuation worries and overinvestment concerns resurfaced. I definitely agree with that. Market pullback reflects overdue cooling after excessive complacency, concentration, and rate cut optimism. I disagree with that. Kevin, explain yourself. We just had a normal pullback. Those happen. Did we have a ridiculous pullback in AI? Of course we did. The profit taking for the year was done over the last I was going to say 2 months, but the last 5 or 6 weeks. Profit taking occurred. There is a huge amount of rebalancing. Other than NVIDIA, we're right back where we started. That is a pullback. It's not an overdue cooling. It's not excessive complacency. The concentration has been there for going on 5 years. The rate cut optimism, it's a 1/4 point. We've cut the last 1%. It hasn't done anything to our rates. It hasn't made them cheaper, hasn't made them more expensive. We're in a rate, I guess, a rate, I can't think of the word, and I'm yawning. We're in a rate range where it just is a certain place that it's not going much higher, it's not going much lower. So I found it interesting because they gave all these reasons. It doesn't make a whole lot of sense. It just doesn't. Yes, frankly, the market's been due for a pullback. But that's it. It's not too expensive from a valuation standpoint. You can't say because the market valuation, after putting what, $17 trillion through a financial crisis, after putting more money through COVID, you can't live off of, well, the 50-day S&P average valuation is 17.5%. We're up at 23. No kidding. Grow up. Understand when you put, I'm going to go off on a limb here. When you go juice the markets by $35 trillion, when you give the GDP $35 trillion or more, and when companies are making trillions of dollars now, to be surprised and say that the market valuation is overextended, it's too expensive, you can't do math. The new average valuation for the S&P should be somewhere between 23.5 and 25. That should be the new normal for an S&P PE because of how much money was put into that market, because of how much money companies are earning and creating right now. This is simple math. You want to prove that you're smarter than a stockbroker? You want to prove that you're smarter than a CNBC, Bloomberg, Fox Business News, Kramer, TV specialist, expert in the market? Do the math, and we should probably be at somewhere around a 24 to a 25 S&P 500 PE if you count price to earnings with all the money that was put into the market. I'm shocked that people are not figuring this out. We're going to keep riding the next 7 until it doesn't work. Still bullish. Ugly looking chart, pull back, but we are back to bullish. Have all 3 of our crossovers. I'm sure the 520 would have crossed right there. All 3 crossovers saying, hey, we're good. Pretty interesting to see us touch the Williams percent sold, and look at that bounce higher that we just got. Now, this is just the Dow. No one pays attention to the Dow. It is a TV. It's not important. Let's go to something that is important. The S&P 500. It took us 1, 2, 3, 4, and we closed above it. 1, 2, 3, 4, and we closed 3, and we closed above it. 7 trading days. That's a pretty W-shaped return. Down above it for a single day, down to test it, off we go. Don't be surprised if we finish the S&P 500 at around 7,000 for the year. Jim, I caught your question. Let me go to that here in just a minute. NASDAQ, same exact thing. It's a W-shaped recovery. It technically is a down month for November. But boy, we looked pretty darn good for a down month in November. Looking at the falls, 24 down to 21, 22, 10% fall during the month. Some of our stocks had a 35 to 40% fall. we're doing pretty darn good. December, I'm putting 2%. If I had any guts, it would be closer to 3%. Let me go back up here. It's about a 3% to get us to close at 7,000. I'm starting at 2%, but my overall thought process is we'll probably see a 3% return by the end of December. We'll close somewhere close to the 7,000 range. Earnings pretty small. Last week of retail, so to speak, AEO, Marvel. Wednesday we have Macy's, Five Below, CRM. I'm brain farting on what that is. Snow, Dollar Tree, Dollar General, Ulta, Salesforce. It's Salesforce on Wednesday. Interesting. Construction spending, ISM manufacturing. We have ADP employment, ISM services on Wednesday. Friday is a mixed bag. Friday should be our average work week. I'm going to give you guys a big button here, but we probably, as we're trying to play a little catch up here, we're probably going to have the personal income, personal spending, PCE prices, and core PCE prices. And our average work week will be pushed a half a week or a week into next week. How are we looking at trade? We can't let things run. There was a question that's coming in. I find it very interesting. The question is, who is reaping the profits from the last rate cut? And the question is it the banks? Now, something to remember, a rate cut to move itself through the economy is really a 12 to 18 month process. And I think with trade deals, fears of inflation, let's face it, 2025 was the year of scare tactics. And nothing really happened. I'm going to be 100% honest with you. I love that politicians are getting held accountable. I would love to see somewhere between 28 to 80 House representatives, somewhere between 16 to 28 senators. I don't care if they're Republican, Democrat, Tea Party, Libertarian. If they've broken the law, it's about time to see some of these SOBs go to jail. I love it. The problem is when you have that binding government, some things just don't move. I'll be honest with you. Anyone notice gas prices recently? Anyone notice gas prices recently? Or Utah? Or Utah? Gas prices hit $2.99. I'll call it cheap unleaded. And $3.49 for diesel. I still expect and want to see gas prices go down to $1.60, $1.70 again. I want to see diesel $2.10. But when we ask who's reaping in that, who's making profits from the rate cuts, I don't know. It hasn't. Standard rates, credit card rates, it just hasn't moved anything. So I don't know who's reaping. I can't find it. To be honest with you, I just think we're kind of stuck in no man's land. I'm not sure anyone is reaping anything yet. But that is an excellent question because it makes you wonder, well, someone's got to be doing okay. Someone's got to be taking advantage of those cuts. Haven't seen it. Russ just rubbed it. Russ Kramer just rubbed it in my face. Hey, we're 259. It's really dumb. Utah's one of the higher gas priced states. We're always in that top 8 or 9, top 10. We have refineries. We drill out here. Whole east part of the state is an oil basin, and our gas prices suck. It's ridiculous. I don't know what to say other than that. They just suck. Okay. Interesting. How much money you need to be in the wealthiest 10% of Americans? If you make more than $210,000 a year and have a net worth of, your home, your sale of your business, those kind of things of $1.8 million, then you're in the top 10% of households in the United States, being the wealthiest. Interesting article. JP Morgan's bullish outlook is that 8,000 is in play on the S&P 500, which means one more year that we're going to be in that 13 to 15% growth on the S&P 500. I can see it if we have, again, a correction. If we go through a correction, the beginning of next year, drop 20%, I can totally see that happening next year. Morgan Stanley hikes price target for 2 chip makers. NVIDIA, Broadcom. Price targets, pretty darn good. Pretty darn good for a stock that's trading in the, 170s for NVIDIA? High 170s. Why don't I find out what I'm talking about exactly? NVIDIA closed today at NVIDIA closed today at 179.92. 250. There's another $70 to the upside on a $180 stock. It's a great return. That gets close to that 40% return again. Bank of America expects a meager gain for stocks next year. Notice their bear case scenario. In a bear case, the S&P 500 could fall to 5,500. All they're doing is taking the gains of the last 3 years and cutting them in half, saying we need a 35% drop. On the upside, 8,500 on the bullish side. Think about that range. That's a 3,000 point range on a market that's trading at 7,800 right now. Out of curiosity, I mean, that is kind of ridiculous. 3,000 divided by 7,800. They're giving you a 38.5% range of where the S&P 500 can land. We're going to guess at almost 38.5% of what the value of the S&P is. We're going to say it's in that range. Please don't take any of these speculative guesses from analysts to mean anything than someone that's in somewhere that can get published is making a wild guess. And for Bank of America, they put the S&P 500 in a 38.5% range of where it's currently trading. It's not really narrowed down. It's not really specific. They've got a leeway of 38.5% of the value of the S&P 500 of where it's going to be or end in 2026. Not really impressed with Bank of America. I'm just saying, for a friend. For a friend. Article about November wasn't kind, a very difficult month. Go ahead and read through if you forgot any of our commentaries through November. Obviously, we had an issue for 4 weeks with our platform. Scares me when I see an index get hit. Trading stopped for an hour and a half on futures. Mark my words, it's not gonna happen. Well, it won't be long. Let's put it this way, it won't be long until our markets, our indexes are stopped because of an AWS outage, a data center outage. It's coming. There will be a day that won't be futures. It'll be a market that takes a crushing hit. And we'll have a day or two or a week where it gets hacked and the markets are going to be closed. Very interesting article on the Black Friday. Best numbers ever from what I understood, but it could have been better. Reasons why it can be better, why they extend Black Friday now. It's not like it used to be. It's not the best prices of the year. Very interesting article on how Black Friday has changed. All right. Any questions you guys have that I can answer? Thank you for asking the question about who's reaping from the profits. In all honesty, it kind of makes me feel like the cuts haven't gone through the system yet, nor do they know how to be used. So I don't have a great answer on who's reaping from those profits yet, but that gives me something to study on for the next week. Question for stock replacement. We went through stock replacement. We went through the stock replacement strategy 3 or 4 weeks ago. But all we're trying to do is position ourselves saying, for Micron, we spent $25 to try to make $80. And we're thinking or betting Micron will trade above 300 by the end of next year. We have the right to buy at 220, obligated to sell at 300, but we're taking huge amounts of profit off the table on Micron. So yes, that's our stock replacement. You're probably going to see a bunch of them. We've been in stock replacement strategies for Meta for a couple of years now. We're in it for Palantir. We've been in it for Boeing in the past. That might be a good one where you might see some profits go to. We'll get into NVIDIA. We have a lot that we're looking at. All right, here we go. Abraham. In your opinion, which is the best financial stock for caller purposes? So the financial stocks, if you're looking at a caller on financial stocks, it's going to be a 2 to 3 to 4 year process, because we're going to get rate cuts. And when rate cuts happen, financial stocks suffer. If I was looking at a financial stock to be in, I'd be doing a covered call strategy to get in and out relatively quickly, because they'll probably fall not all at once, but slowly. I would think regionals, if I was going to get into financial, because of the rate cuts that are expected to come, and again, another 1 to 1.5% going into next year, regionals should be doing the best in that area. I would look at a Key Corp, KEY, or a Zion Bank, ZION. Those are the ones that I would be, but your expectation is you might lose through the rest of Trump's presidency, in which case you're adding shares for a 3-year period of time on any of the big financials, the Goldman Sachs, Morgan Stanley's, JP Morgan's, Bank of America's. You might be sitting on those for the next 3 years, picking up shares slowly as they shift down until we might get a rate cut again, or a rate hike again, excuse me, not a rate cut, a rate hike. So again, if you're looking at areas to avoid, financials are probably one. Healthcare has done well, but it will probably not continue to do well into the future. Oil, gas, energy, not an area to be in. Those are the areas specifically that the Trump administration wants to make cheaper. Insurance, not a good area to be in. We've seen this the first time through Trump. What does it take for us to learn from it? So that's the short and the skinny. Just in general, there's some certain areas of the market that probably are not going to benefit you with the administration that we currently have in place. Obviously, solar's been crushed. EV, electronic vehicles, works really good in the dense cities. I mean, solar vehicles are great for probably 25 to 30 cities in the United States. After that, not really helpful. We rode that wave. That was a well, I guess it could be a Biden, so never mind. I want electronic vehicles, solar panels. We rode the solar power wind mill phase through Obama. Pretty much dead. Not the best use of taxpayers' funds. Onto a field, don't go so far as they say they're going to. My brother does not have the newest Tesla. He has the version previous to the one that just got released. And again, man, batteries are 40 grand to replace when they don't work. He's an LA guy in the heat and using his car. It's a 160-mile car. If you go farther than that, it's really difficult. Nathan, you said you'd like to be cash heavy going into next year. Elaborate on your thinking here. What are you trying to avoid and what are you trying to gain by doing so? So cash heavy, we're trying to take profits. We have Google that we're trying to take huge amounts of profits off the table. So the reason why we're becoming cash heavy is we're booking profits. That is the number one reason that we are going to be cash heavy. We've had some amazing runs in some stocks. We're going to take some of those profits of hundreds of thousands of dollars. Well, for the business as a whole, millions of dollars of profits came off of Meta last year. Micron this year, Disney this year, Nvidia this year, millions of dollars of profits. Next year's going to be Google at the beginning of the year if we can get called out of those. And some people that have the JP Morgans, we're getting out of those. We're getting out of Bank of America at the end of this year, if not pushing it into the beginning of next year. We're booking those profits because you have to take a profit, and we can do so at a long-term capital gains tax rate. Number two, we're booking those profits because we're looking for an opportunity going into next year. When you get a market up 70%, it's due for a correction. A typical correction, if you study Elliott waves, Fibonacci waves, when you have a 70% run in the S&P 500, and it's probably not that much, it's probably 60 right now, right? 30, 50, 65%, you're due for a correction that takes away half of that. So we're in for a 30 to 35% correction. I want to take profits off the table and do so now so we can reset those timetables and start our 1 year, 1 day long-term capital gains clock all over again. I don't want to risk the profits. Could we add double the puts? Yes, but stocks and accounts still go down. Let's be smart. Let's take profits off the table and let's get ready to be cash heavy into what should be a 25 to 35% correction. Simple Elliott wave, Fibonacci, herd mentality. Half the profits come off the table till the market looks cheap. We've had a 66 to maybe 70% return on the S&P 500 in the last 5 years. So we're preparing, and we're preparing in a very advantageous way to taking long-term capital gains and resetting the clock for a lot of these stocks. We had a great opportunity. Well, actually, we have a great opportunity. Nvidia's at $179. We've already seen it up at $240. If we had more cash, we could have got into Micron on the drop. Does that mean Micron is going to drop that far again? Probably not, but don't be surprised if it on earnings on the 17th of December, Micron doesn't go down and test 192 again. We'll buy back in. We'll start to pick up some shares at 192 in Micron. Nvidia, we had more cash, 160, we'd be in more Nvidia. We want to get out of Google. We have our stock replacement strategies on Google. Let's get back into Google down around 240. Netflix did their split. $11. Where's Netflix at? I haven't watched them yet, but we're looking at Netflix. $109 after being up $1.55 today on Netflix. Stock that just split, what, 10 for 1? We have some opportunities that are out there, but if we don't have the cash available to be in them, we can't be in them. Great question. I hope that answers your question there on why are we trying to be into cash, the reasons why, and what we're looking for. Correct, Nathan. Want to find some value. I mean, is the stock market fairly priced? Yes. Are some stocks fairly priced? Yes. But could we get into a Boeing that's way undervalued right now? Definitely. Netflix is cheap after their split. Disney, cheap after their split. We have some retail stocks, cheap. Some have come up. I mean, I think it was Kroger and Macy's had phenomenal earnings. We just didn't have the ability to get into them. Ford is cheap at 13 bucks. Building in USA, there's some opportunities. Lilly, I think is expensive, but ask me when Ulta reports here on Thursday. I might give you a different comment on Lilly. But I don't know if I call that one cheap yet. Only because I haven't spent my time going over it. Eli Lilly. Definitely don't call that one cheap. Definitely needs a, well, I've got to do my research. I don't know what they're bringing in, but I would be, if you're an Eli Lilly, pharmaceuticals, Kennedy's tearing apart COVID shots and tearing apart, um, what's the word I'm looking for? Vaccines, excuse me. Insurances are being worked over for their costs for things. I'm just having a hard time seeing the benefit in healthcare right now. If you've been in Eli Lilly, don't hesitate to take a profit. You can't book those returns until you book those returns. So book those returns every so often. Great questions, though. Someone just commented Eli Lilly has weight loss drugs. Yes, but I thought some were coming, past their their day. But I mean, let's face it, guys. If you don't put in the exercise and you still eat crap, you're probably not going to lose weight. You're going to lose, well, you'll lose weight and muscle, and it's maybe not the best thing for you. Exercise, walk, eat better. Don't take a pill that sucks all your metabolism out and your hunger cravings out. Although, again, Maud might have, I'm not a doctor. That was common sense. But again, I would be taking profits from the healthcare insurance side of things. No one does that. Give me the injection. It just can't be good for your bodies. Yes, I'm probably holding 25 pounds that I shouldn't. But with that said, after the market closed, I moved about 4,000 pounds of wood with my boys today. So I'm still exercising. And no, I do not have a Diet Dr. Pepper Blackberry Zero soda in my hand. I would never do that. But I am eating my own cow, vegetables, and fish and chickens. All right, guys. Hey, have a wonderful evening. I appreciate being with me here tonight. We'll have 2 more of these going into the end of the year, and then we're just going to spend our time doing research. I don't have a great answer into what we would be putting money into. That's what I'm going to spend my time. Again, I've got Keeve and Brian. We're going to be crunching numbers for thousands, meaning probably 1,800 to 2,000 stocks. There's a lot of garbage out there that we've heard from some people, but we're going to spend our time finding good undervalued stocks to move into next year. Let's face it, a lot of people have ridden the wave of AI. It will probably go much higher into the future, but it'll probably be choppier and more difficult to be in. Again, if we could have started people at 300 shares of Micron, picked up another couple hundred with this drop that we just had, it just seems like it's a better idea to be in cash and look for opportunities going into next year than any other. More volume on my end of the webinar. That's a good question. I'm at 100% volume. How about everyone else? Do I sound good on my end, or am I sounding a little quiet? I'm okay. I got 3, 4. I just got 5 okays. So I don't know. Maybe turn up your volume a little more, but my volume, I believe, is 100%. I will run some other. I'll run some other tests. Let me see. Let me work on that one. I don't know if I can or not. But it seems like everyone else seems like I look okay. All right, guys, have a good evening. Look forward to seeing you next Monday. Have a good night, everyone. Bye-bye.